Another day, another FUD story about Tesla. And that's what we're going to talk about today. Not just are we going to talk about the FUD story and the Intercept leaked footage on Tesla, but we're also going to talk production numbers because there's a big change. And I don't know why my accent is changing, but I do know that it's another day, which means you need another reminder to check out the programs on Building Your Wealth down below because nobody else does the fundamental analysis live streams that we do on YouTube. At least nobody that I know. Anyway, let's get started with the video. So the first FUD story of the day regarding Tesla has to do with the following. Surveillance footage obtained by The Intercept of a Tesla abruptly stopping on the Bay Bridge, resulting in an 8-vehicle crash that injured 9 people, including a 2-year-old child, just hours after Elon Musk announced the new full self-driving wide release for the beta. There's the Tesla. You can actually see that lane change and then the first rear end and then the second one stops and then a pileup occurs right here. We'll go ahead and play that again just so you can see it here. It looks like we get the Tesla coming in, lane change right here, and all of a sudden, a slowdown and a stop here. And then, of course, a pile-up wreckage thereafter, which quite interesting. You could see the driver is clearly not incapacitated because, well, he's getting out of the vehicle. This is a 77-year-old driver who indicated that he had the vehicle set to full self-driving. We don't actually have any kind of data dump from Tesla yet on whether or not that was true. But let's talk about phantom braking because I can finally say I have Tesla full self-driving, and I too have experienced the Tesla braking at odd times, especially in like near edges. I've noticed, like when you're near sort of a curb to a plaza or maybe like a wall or a boundary. And usually if you're paying attention, what you do as a Tesla driver is you hit the gas. You're supposed to be paying attention at least, and anytime I've seen this happen, I've reacted before the Tesla has slowed down any more than like 2 or 3 miles an hour. It's not like it slams on the brakes. It's usually just, it's more of like a Tesla foot off the gas thing that happens, and then the regen braking kind of slows you down. And that's the moment where you're supposed to hit the gas and kind of accelerate, which clearly doesn't happen in this video. So there are 2 potential scenarios here, in my opinion. Number one, either full self-driving wasn't active and I don't know, maybe the guy made a mistake here, clearly, okay? That would be scenario number 1. If autopilot was active and this accident occurred, obviously we're gonna get the crazy FUD stories all over about how unsafe it is and how the government needs to regulate these vehicles, despite the fact that Teslas are some of the safest vehicles on the road, even as measured by the Institute for Highway Safety, which, you know, generally government bodies and government-associated bodies aren't too fond of Teslas anyway, yet Teslas are still ranking in some of the highest safety levels in the world for crash tests. On top of that, you have a 4-time fewer accident rate for vehicles with autopilot enabled, but you do get people with autopilot on, and autopilot sometimes does some funny things, and you gotta pay attention. I just pulled out of a supercharging spot, enabled autopilot, and it may have, you know, kind of cut the corner a little sharp and ridden over the curb. And I'm like, damn, I should have known better. You know, like, I'm not blaming the car. It's a beta. It's not perfect, right? Now, I'm not just trying to fully defend Tesla here. I think phantom braking is really weird. I don't know why it happens. I think the algos obviously still have learning to do, and this is why they're on a beta release. But I also realize that the Tesla can do some funny things, and so I'm ready to accelerate when it does those funny things. So that clearly did not happen in this case. Instead, the driver allowed the vehicle to come to a complete stop, which is insane in my opinion. I've driven a Tesla and driven autopilot in Tesla since 2017, and I've never let the vehicle on essentially a motorway, you know, 55-mile-an-hour motorway here. I've never let the vehicle just come to a complete stop. It's just a little odd. Lane change and just completes. I don't know. Personally, I don't get it, but whatever. So that's the Tesla FUD story that's getting a lot of views right now. Tesla haters are having a field day about it. But at the same time, we're getting news that finally Tesla might actually be looking at increasing production the way I projected Tesla would in 2022. Unfortunately, I made the projections in about April of 2022, and I suggested and indicated that Tesla's probably going to figure out their manufacturing model with Berlin and Texas, and then unlock what we call copy and paste. Now, that overly simplifies what Tesla would actually do, but basically the copy and paste idea is you take all of the experience you have of building these new grand gigafactories, Berlin and Austin, and you multiply that around the world. We recently heard that Tesla is considering their expansion into northeast Mexico, just a few hours away from Giga Texas, and could be the site of a new low-cost Tesla vehicle that could be produced by Tesla, especially since the average hourly wage in Northeast Mexico is only about $3.40 per hour. Now, I know initially a lot of people think, oh my gosh, that's terrible. Tesla is going to take advantage of cheap labor, when the reality is if Tesla moves into this automotive area where existing legacy auto manufacturers like Mercedes, BMW, Ford, GM are already using that labor, when Tesla comes to the area, you'll actually probably see wages increase to the benefit of locals in that area. But generally, people who complain on the internet don't have economic backgrounds and they don't like to think that way. But anyway, this is a good thing. But on top of that, now we have reports that Tesla is considering not only multiple different expansions, but is also potentially looking at a new plant in Indonesia. Now, this is actually phenomenal. Tesla is is close to sealing a preliminary deal to set up a factory in Indonesia. Now, remember, a lot of people are moving their manufacturing out of China, not only because of the unclear sort of political regime that you can often have, as we've realized around COVID policies and forced lockdown policies, but also, let's be real here, labor is cheaper now in places like Indonesia and India. How wild is that? You think labor is cheap in China, wait until you go to some of these other countries. It's actually quite remarkable. And again, that is to the benefit of locals in that country. You're raising wages across the world. But anyway, this area is great for key battery materials. The plant could potentially produce 1 million vehicles per year, in line with Tesla's ambitions, really to exceed their global capacity. In my opinion, this, by the way, we start getting talks about new plants, Indonesia, Mexico, or whatever, it's a sign that Tesla's looking past the near-term FUD demand dynamics of being in a recession, right? Which has actually been hurting a lot of people's wealth, right? Stocks down, real estate falling, the disaster of a depression that's probably happening in China. You've got a huge decline in wealth across the world, and unfortunately, that is not just hitting poorer individuals, but it's also hitting wealthier people. And interestingly, it might actually be hurting wealthier people more, because where we're seeing the biggest pay bumps are in blue-collar work right now, where you're seeing the most layoffs in white-collar work. Pretty wild. And that could affect Tesla demand, right? Now, those we believe are short-term catalysts, right? Like, for example, in Singapore, we have reports that Tesla is continuing to offer discounts, $5,000 discounts for people who trade in an existing ICE vehicle, which is interesting because I wonder what Tesla's going to do with a used inventory, which is, like, in my opinion, catching a falling knife because used vehicle prices are plummeting. Also offering a $5,000 credit to help people cover the cost of the certificate needed to operate a vehicle in Singapore. They're also now offering free wall connectors to or to batteries. These are all things that, you know, unless input costs really start plummeting, yeah, Tesla's margin's going to get squeezed. And, Tesla is thinking about expanding at the same time, which then potentially reduces free cash flow. But it's interesting because if Tesla really is double and tripling down on these capacity expansions, it makes you think that Tesla must clearly have a path for so much demand in the future, or new pricing strategies that are going to induce that new demand in the future in order to keep these factories busy, especially if a lower cost Tesla comes out and that Cybertruck finally comes, which who knows when that's coming. Although the Gigapress was just delivered to Giga Austin, where the Cybertruck is expected to be built. But anyway, the discussions include plans around multiple facilities in the country, serving different functions across the production and supply chain. A deal hasn't been signed, and the agreement could fall through, the people said, asking not to be identified. Indonesia has long courted Tesla, last year striking a $5 billion nickel supply agreement with the car maker. In an interview in August with Bloomberg News, an individual here said that the country wants Tesla to make electric cars there, not just batteries, and is willing to take the time to convince Mr. Musk to see Indonesia as more than just a supplier of resources. That's a fancy way of saying, we will give you incentives. I don't know what's with the German accent today, I'm sorry. But anyway, Musk representatives didn't immediately respond to requests for comments. An Indonesian factory would be Tesla's third outside its home market in the US, joining Shanghai and Berlin. Indonesia offers a gateway to the Southeast's 675 million customers. It's a tough market for global automakers given affordable cars are usually priced below $20,000, making up the bulk of sales. And this is the thing where you've got a fight between Tesla and BYD right now, right? BYD, look, I people get mad at me when I say this, but it's just the truth, okay? BYD brings 1.45% of their revenue down to net, okay? Think about that. You make $100 of revenue at BYD. How much do you bring down to the net? $1.45. How much does Tesla bring down to the net without US electric vehicle credits? They bring $14.50 to the bottom line. That's 10x BYD. It's remarkable. It's absolutely remarkable. Now, of course, a lot of talk about BYD. In fact, let's go ahead and take a look at this Bloomberg opinion piece. You can get these at Bloomberg.com, by the way, in case you're wondering where they're from, just Bloomberg.com. All electric vehicles are not the same, nor are the companies that make them. The favorite pair these days is Tesla versus BYD. So let's actually compare a little bit. Let's start with the basics. In December, BYD sold 235,000 vehicles in China. Of those, basically half of them were plug-in hybrids and the rest were battery electric vehicles. Hybrids, by the way, very expensive, right? Low margin. You've got two basically powertrains going into the vehicle. It's pricey. It's expensive. And this is probably why their margin just isn't that great, which going into a recessionary time, not wonderful. BYD sold over 900,000 of each type of vehicle in 2022. Tesla made 55K in China last month with a total of 700K for the year. Essentially, they compete in what investors would call product segment, a slice of what the company does. Here's the thing. Hybrids and BYDs run on fundamentally different technologies and powertrains. The cost of the car manufacturing and owning it changes, as does the choice between efficiency, range, and performance. Hybrids can be as much as half the price as well. But that's where the problem comes, right? Think about that. Hybrids, more expensive to maintain than all electric vehicles. Yes, hybrids might be half the price, but that also means a disastrous margin story for BYD, which all you have to do is go to the investor relations page of BYD and you'll see it. Very simple. This is public information. The merits of one versus the other offer an entirely separate debate. Many critics say plug-ins aren't even green cars. They're more like a wolf in sheep's clothing. However, then you do have Toyota that absolutely loves hybrids. And basically they make this argument that, hey, well, hybrid is still better than no electricity usage at all, right? Now, you also have very different business models between BYD and Tesla, goes on to say this opinion article. BYD started out as a battery company that now makes cars. Which is the opposite about Elon Musk. And BYD has a firm grip on their supply chain and has moved more towards a vertically integrated supply chain, much like Tesla, like securing heaps of raw materials. Elon Musk does talk about owning lithium mines, but Tesla is still reliant on its long and deep network of suppliers in China. Now, so far, this doesn't sound like the best piece for Tesla versus BYD, but there's an interesting point here. They argue that BYD is basically going from less expensive cars to more expensive, and Tesla is going from more expensive to less expensive, right? You're seeing price raises at BYD, price cuts at Tesla. The margins are terribly different. We've already talked about that. And that you could actually see margin compression on both sides, right? Realistically, Tesla's margin could come down and BYD's could grow. Maybe. Depends how the recession goes. But here's an interesting piece that I really like. I'll hide myself for it so you can see this full paragraph here. Tesla seems to have taken advantage of the weakness in prices for some raw materials. This is good. And components that have been sky high in recent months in China. It does not have supply locked up the way BYD does. Now that might sound like a weakness, but it could actually be a positive thing. Why could it be a positive? Well, if Tesla doesn't have supply locked away, what does it mean? It means that Tesla, if a market prices for components and commodities comes down, potentially, and these specific products aren't locked away because we know some of them are locked away, it means Tesla can take advantage of market prices today rather than waiting for contracts to roll off every 6 months or whatever, meaning there's a lag in when they'll actually be able to pass through lower costs to lower prices. if they don't have supply locked away, and they're actually taking away or taking advantage of these lowering prices, you could actually see margin preserved at Tesla. Now, maybe that's just hopium, but it's an interesting comment. Lowering vehicle prices potentially indicates an intent to tap the rising demand for electric vehicles tapped below 300,000 yuan and destock. Sales are expected to grow 50% in Tier 3 and Tier 4 Chinese cities where incomes are lower. Now, it's important to compare 300,000 to a US level. It works out to about $44,000, which is basically suggesting that we want to simplify the costs for the Model 3 and get to a more mass market approach, while BYD tries to focus on higher end. Now, that'll be really interesting because you wonder, how much of a selling pitch is FSD going to be? Well, with FUD stories like the one we started with, I don't know. But anybody who's actually using FSD looks at this and goes, man, how could you ever buy a car again without full self-driving? My wife is somebody who's never wanted a Tesla, but after she saw FSD, she's like, wow, this kind of makes me want a Tesla. I was blown away when she said that. So, fascinating. But it's not the last story of today. We've got a lot of information. In fact, take a look at this. Tesla considering a $775 million Texas factory expansion. Now, what's crazy about this is Elon Musk has said previously, and this is great, that they plan to open 10 to 12 new factories to increase production. That's what I predicted a year ago. I was just about 6 months early in that prediction before Elon Musk actually said it. Now, that's great in the long term, not so great in the short term if you make predictions too early, because you could allocate capital inappropriately. But that's okay. Everybody ends up making mistakes. But let's get the details of this factory expansion. Take a look at the details which Electric broke down. Well, Electric hasn't been the most bullish on Tesla lately, I will be telling you. But anyway, 4 projects include a almost 700,000 square foot facility called Cell 1 that would be built outside of the Austin Gigafactory. Folks, this right here is like a turn on to me, okay? Construction is expected to start January 23rd. Wasting no time. Let's go. I love that. That is what I'm talking about. The project with the next largest footprint is the drive unit, 400, almost 20,000 square foot facility. Construction is expected to begin Feb 6. A cathode facility expected to start production Jan 30th, completing this year. Most of these completing within a year, actually. Feb 12, 2024, Jan 15, 2024, December 18th, 23. And then another smaller sort of cell test lab, really just the size of a house here, completing in about August. These are based on permits, right? This is really exciting. I mean, to me, this is a suggestion that regardless of the short-term nonsense that's going on with Tesla, Tesla's saying, look, we are so confident, we are doubling down, and we're going for that copy and paste model. Imagine now Tesla goes forward, and within 6 months, you have the Mexico facility announced, the Indonesia facility announced, although maybe those are the same rumor, right? Like maybe Tesla's picking between the two. TBD. And then potentially you have, well, it already looks like you have the permits for this Texas expansion while they're still ramping Giga Texas. Oh boy, like the numbers for Tesla are just getting so gorgeous, even if margin falls. This is a company that, as long as it could sell Teslas cheaper, which I think it can, especially as they are by far and away 3 to 5 years ahead of the competition in self-driving. Nobody's got self-driving like this. I mean, you even look at like some of the Mercedes EQS drivetrains, really, really great vehicles, powerful vehicles, well-designed vehicles, quality vehicles. But you're talking about nominal amounts of roads that are mapped, nominal access to actual self-driving technology. It's a problem. And so this is where what I like to do is I just look at, hey, you know, what if we reduce prices and reduce margins at Tesla? And I've done this before. I've done sort of these worser case scenarios where maybe we produce 4.2 million vehicles by 2025. I drop the revenue per vehicle by $5,000. On top of dropping the revenue per vehicle by $5,000, I also drop the margin to 27%, down from 30%. And then what I do is I include 0% for FSD here, okay? No FSD upgrades. I'm still sitting at a price target of 515 in 2025. Now, I know as soon as people see a 50p ratio, they're like, oh my gosh, that's so ridiculous. This is calculated based on at least a 30% growth rate at Tesla. And then basically a PEG ratio of about 1.6, 1.7, which is pretty reasonable. Basically what you do is 50 divided by the growth rate. It's about a 1.67% x PEG ratio. That's how you do this. As long as you're growing by 30%, 1.67 times PEG is totally reasonable. Now, if that growth rate falls, then obviously the future PE rate will fall, right? If the growth rate for a company goes down to 20 and you go to a 1.6 times PEG, sure, the PE ratio should only be 32. You know, the PE ratio right now for the S&P is 18, which actually implies about a 10.7% growth rate for all the companies in the S&P 500. That's a ripoff. We could actually be in an S&P 500 price bubble right now because I expect EPS to grow maybe 3% for the S&P broadly. Maybe. We'll see what happens, obviously, through this recessionary environment. But anyway, these are some of my thoughts on the latest on Tesla. Thank you so very much for watching, and we will see you in the next one. And I mentioned we've got programs on building your wealth. Link down below. Check them out.